Okay, thanks again for joining me for this month's webinar. I've got the euro up, so I guess we might as well start with it. It's about the most interesting chart I can think of at the moment, to be quite honest with you, because unfortunately there's not a lot going on. If you really only look at this chart recently, there is not a huge amount going on with the euro either, unfortunately. As you can see, we've basically just gone sideways for 2 months. So to get any kind of perspective, you've really got to go back a little bit further. And I actually open this up now. You can obviously, we all know that euro had a big tumble, but basically the whole of this year, it's really just flattened out. You can see right now that we've had a bit of a dip lower, but we're only trading around where we were at the end of January, having moved around a fair bit since. Okay, yeah, but we haven't really gone in any particular direction. So what do we? I'm thinking this is an inverse head and shoulders pattern. I put the triangles on here so to more clearly show the left shoulder, head, right shoulder. It's not a clear pattern at all. So I think you could argue that this is an inverse head and shoulders pattern, but of course it's not confirmed until we get a break above the trend line here. This thick black trend line, which at the moment is just above the 114.00 area. I'm still not sure if it is an inverse head and shoulders, but it's about the most interesting pattern I can find on any chart at the moment, so I thought it was worth bringing to your attention. There are some other bullish signs in the euro, though. At the moment, it was a lot more bullish before yesterday's big sell-off, of course. But even so, yesterday hasn't put too much of a dent in the longer-term perspective, from what I can see at the moment. You can see the red lines. The red channel lines show how we have at least been staging a very mild recovery since March, April. I wouldn't call this a double bottom. I don't think this low is close enough to the March low to say that's a double bottom. But we certainly have been in a gentle upward sloping channel at least. So it's mildly bullish trend-wise over the last 2 to 3 months. I quite like this moving average crossover here. That's fairly positive as well. So the last time we saw anything like that, it's worth looking at. Actually, let me scrunch this chart up. Ooh, it's scrunched up way too much. Okay, I'm going to have to scroll back. These blue and purple moving averages, you see we've got a crossover here. Back in June 2014, now that was when the market had suffered a little bit of a pullback, but nothing too serious, and then we bounced to hit that moving average and then collapsed. So that was certainly, that negative crossover was certainly a signal to sell when we saw that. So I'm wondering whether the positive crossover here, the golden cross as they call it, dead cross is the negative crossover. I wonder whether this golden cross here is something that is a positive signal longer term. Obviously, if we were to get that same move in reverse, then we would be looking at quite a sustained rally. I'm using the 55 and the 100-day here. The red line is the 200-day, and I stick the 500-day on just in case we ever get up close to it. So it's mildly positive at the moment. I think you can argue with this positive red trend channel moving average crossover, and the fact that we are holding above these moving averages. Of course, we managed the price managed to cross over in April and then hold above. We did dip down, but we managed to eventually hold above the 55-day. So again, that's mildly bullish. I mean, nothing to get too excited about at the moment, but I'm seeing some certain positive signs at least. Obviously, if we can't hold above the moving averages now, which are around the 110.80, 110.80, 110.60 area, then that would be a problem. And a break below the lower trend line, which is around the 110.00 area, well, then we'd have to give up any thoughts of a positive move for the euro, I think. But until that happens, I'm mildly positive. Anyway, at the moment, we are in mostly no man's land. You can see we've just gone sideways here throughout the last, throughout the last 3 weeks, going on for 4 weeks, really. So the very, very short term, absolutely no direction whatsoever. And unfortunately, that is the same picture for so many markets, oil, gold, other Forex markets. So the big question is, do we break below the moving averages in the lower trend line, or do we break above this, what could be called a neckline to the head and shoulders, if it is one? Again, I'm not 100% sure it is, but worth bringing your attention to it. If it is a neckline to head and shoulders and we do see a break above it, then that would be obviously very positive. Wouldn't take us much at all to be jumping up towards the 200-day moving average there. So what I would be looking for is, yes, a break above the trend line, confirmed with a break above the June high at 114.36, which I think was last week's high, in fact. So that trend line did its job perfectly on last week, as we had expected it would do. And then, of course, a move above the May high, which is much higher at 114.66, would be yet another positive confirmation of a decent move to the upside. And who knows, yeah, 200-day moving average would be a decent target. Maybe we could even get up as far as this upper trend line, which coincides with some longer-term Fibonacci resistance, actually up around the 118.00 area. So 117.00, 118.00 area would look like a decent first target for a break above this trend line, at least. Okay, yeah, that's the positive scenario. You know, the negative scenario, break below the red trend line. In between here, there's not an awful lot going on, but I'm erring on the side of positivity at the moment. The stochastics are not that positive, but maybe this is just what's happening now, a little unwind to this moving average before a push high, just to see that moving average move out. Well, we've already moved out the overbought area anyway, so that might even be enough. Who knows? We're actually oversold on a short-term slow stochastic, and the MACD as well is certainly down there. So anyway, that's my argument for a bullish euro US dollar. Please do shout out any markets that you want me to have a look at, because I must admit I'm struggling with any ideas at the moment. There really isn't much going on, but I'll plough through the markets that I do, and we'll try and make some sense of them. This is cable. This is certainly a lot more positive than that euro chart, as you can see. Kiwi go lower. I'll have a look at it. I have no idea. I haven't looked at Kiwi for a long time. Is that the New Zealand dollar versus the Kiwi? Yeah. New Zealand dollar versus the US dollar. I'm guessing you're looking at, yeah. We'll have a look at that in a minute. Okay, I've got the cable chart up, so we might as well have a look at it. This is certainly a bit more positive. We've got a much stronger uptrend over the last 2 months, as you can see, looking pretty good. We have hit this trend line resistance. You can see that one, an obvious trend line if you join up the February and May peaks. Hit that perfectly. We've come back for a little correction, overdue really when you look at the overbought situation, but I don't think it's going to be anything too serious. Again, bullish moving average across there, and that certainly did trigger some nice buying. Look how that moving average held and triggered some nice buying. We've got the crossover, so if the euro were to follow that sort of pattern, that certainly would be a nice little move higher for the euro. If the push above the 200-day moving average saw the price accelerate. The bigger picture, we're in this sort of wedge pattern here with this upper trend line and this lower trend line, this rising wedge formation. So it looks okay. We do need a bit of a correction in the short term. Yes, we're seeing that already. Anything around the low 156.00 area looks like quite good from a Fibonacci perspective, at least. But if we were to get down a little bit further to the sort of 154.70 area, where the 200-day moving average is, and this trend line, there's quite a lot of trend line intersection here. You can see that would be a good buying opportunity, but I'm jumping the gun quite a long way now into at least, well, certainly at least a few days, but probably into next week before we might edge that far. I'm not saying we will edge that far, but if we did, I think that'll be a good buying opportunity. But yeah, it looks all right for the for cable at the moment. We did hit the 200-month moving average, which I think is why we peaked. That also happened to be a 50% fib retracement of the whole move down from the peak in 2014. So an obvious place, really, especially when you see that big 3-month trend line, 3.5-month trend line. There was a lot of resistance up there from various different factors. Not really a surprise that we've come lower. We called a high for that there anyway. So pleased to see it pull back. But I do think the pullback is a buying opportunity for obvious reasons, sticking with this 3-month bull trend here. GBP crosses. Yeah, Raymond, if you tell me what GBP market you'd like to see, I'd be more than happy to take a look for you. Euro, I guess you might want me to take a look at. Certainly pound's been pushing up against the euro lately. Okay. Gee, yeah, I'll definitely do that one. Okay, New Zealand dollar. I should probably take these old trend lines off. I've probably only look at this once a month when I do my FX Street webinar, so I haven't had a look at it for a while, and it would be useful if I just went back to at least the weekly chart, give me some sort of perspective. Wow, you do like to trade the pound. I'll have a look at all of those for you, no problem. Okay, so yeah, we've been in a really negative trend for quite a long time. I'm going to have to look at the monthly chart to see if there's any reason why we might bottom out. I'd need to see more than just an oversold stochastic, that's for sure. The trades that I like, the markets that I like to trade are, I guess that's what you're asking, Naz. I like the euro, I like gold, I like E-mini S&P. I don't like anything too volatile. So although the DAX is probably one of, if not the most subscribed to market that I cover on my daily reports, I don't really trade it. A bit too choppy for me. You have to really sit in front of the screen all day to trade that, and I'm a bit of a lazy old man, so I don't bother. Oil as well, for the same sort of reason. Don't really trade it, to be honest, which is, I probably should do, because the levels do seem to work extremely well, and they're probably the most subscribed to reports that I do. But yeah, I like, as I say, euro, cable occasionally. I actually like the dollar yen, but it's been rubbish lately. You know, you've been getting a move, then it does nothing for a long time, just goes sideways. FTSE, I'm not keen on. It's a bit hit and miss, that one. S&P, as I say, I do like that one. Okay, right. I'm looking at the monthly New Zealand dollar. Okay, yeah, this might give me some perspective, actually. I'll certainly start with throwing some Fibonacci's on here. That makes it a little bit simple. Oh, big double top. Look at that. Wow. That was a nice double top. Yeah, you can see why that collapsed, can't you? Wow. That is a multi-year double top pattern. This is why you've got to look at monthly charts and not just daily charts. Yeah, you're right. It is a 50% from the March 2009 low to the August 2011 high. Absolutely right. That's what I've just thrown on there. So yeah, that is a support area. Well, 50% isn't really a support area, but it's still worth paying attention to. I do agree with you. You know, we are very oversold. There's nothing else on the monthly chart that would make me want to buy this, to be fair. But if you're short and you've run it quite a way, you've done extremely well, and it would be certainly wise to take some chips off the table, wouldn't it, at this stage, just to see if we do get a bounce. Okay, so that's the most important factor I can see from here. You can see a bit of price action down here in 2010 as well. Some monthly lows around this this 50% support. 6800, 6847. So yeah, there is. I've got 6865 as that level. So that double tops. I'm sure it will eventually. Nice pattern though. Okay, so yeah, all right. Well, I would agree with you. That's the 50%. That's the only thing that's worth paying attention to at the moment. Be interesting where we close the month. If we were to close the month above 69.50, you could say that 38.2% has only been tested on the month, and we would have closed above it. It's just worth pointing out. Right, let's go back to the weekly. Yikes. Yeah, well, we haven't closed the week out yet, of course. No, it doesn't really want to retrace. You're right. I mean, that weekly chart wouldn't be inspiring me with a huge amount of confidence just yet. You know, a close above last week's low at 68.74 would be a little bit more positive. We'd have some sort of hanging man, hammer-ish type thing, which would help to confirm if we were to hold that 50%. Right now, it's a little bit early. I certainly would say it's a bit risky to buy into longs, although I wouldn't advise against covering shorts after. Wow, look at this: 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10th week of losses. So sure, if you've been short for any part of that, you've had a great run. Why try and squeeze the last couple of cents out of it? Take some money off the table and see if you get a chance to sell it again on a bounce. That seems to be the most sensible idea, I think. But you are right. It don't want to retrace right now. Early days, though. Let's have a look at the daily chart anyway. Yeah, it's not the most bearish pattern I've seen. Look, three little candles here. decent sized red candle. You got this little hammer type thing, and then this potentially decent blue candle today. So if we could close up, around the high of the day, 68. Yeah, we could close up around 6900 area. I would say that is a decent little 3-day candle pattern that could signal a recovery. Okay, that is the first sign of any positivity that I can see out of this chart at the moment. Yeah. What else can I say? That's it. I mean, any recovery at the moment is really just going to be a bounce and a bear trend, because I think these weekly and monthly charts look far too negative for me to be saying that's it. Time to jump into this pair. They're going to rock it. But as I say, if we could at least close up around 6900, 6900, that would be a relatively positive 3-day candle pattern, and certainly wouldn't be worth risking to run shorts any further. That's all I can say. You could get a little bounce on there, so watch out for that one. Does that make sense? Hopefully. Obviously, we're getting close to the weekly close, already Wednesday, so yeah, a weekly close below 68.40 would be a bit of a problem, because that's a 50% fib, and a weekly close below there wouldn't be great for this market, would it? But I suppose you know what, you could actually, if you really fancied a punt, you could buy into some longs here, because you need to stop below 68.00. Even if you bought it here, okay, so you're risking 80, 90 pips, but the upside's decent enough. If we do get a good bounce, it's very oversold. We've hit a decent fib support level. You wouldn't rule out a bounce, would you? This is a pretty low risk trade, I guess. If you don't mind risking 100 pips or something to maybe make 200 pips or more, I've seen worse trades, put it that way. But I would actually wait for this candle close first, because this could very easily turn around and be a lower close on the day, and then I wouldn't feel so confident, really. It would all depend for me on a nice little 3-candle bullish pattern. Okay, I think I probably said enough on that one. Hope that helped. Yeah, so we're going to do some GBP pairs. Okay, let's have a look. GBP NZD. Wow, these are all very obscure for me. I'm going to enjoy them now. Let's give them a shot. I definitely want to look at gold and oil as well, so don't worry. I will make sure I do those. Hopefully silver as well. Okay, pound looking good. Oh, I don't have a lot of data for this. I do. Right. I'm going to look at the weekly chart without putting it up here, because I want to crack on, make sure I get to cover all the other markets everybody wants. So let me just have a look at the monthly chart on another window while I talk to you. Let me see. Wow. Okay, this is a bear trend recovery, because the pound has been in a multi-year bear market. Wow. Okay, so we're looking at a drop since 2001. Wow. All the way down to 2013. Okay, so we're now seeing a 2.5-year recovery, which is starting to accelerate. We've gone through a long-term fib, 23.6 fib level. We've rocketed through the 100-month moving average. That looks all right. Okay. We're not hitting any major resistances at the moment, I don't think. Where are we now? 29. We've got, on the monthly chart, have got a bit of resistance around 230, 233. So we are hitting a little bit of resistance on the monthly chart. This is just from some highs at the beginning of 2010, end of 2009. So we could struggle a little bit. We do look a bit overcooked. And the old daily chart here, there's a little warning flashing up there. Look. That candle's most definitely a negative candle. So perhaps we've already peaked in the short term, at least. We do look like we need a bit of a correction. So that candle is a warning as we hit those 2010 highs. Yeah, sort of January high was 2030.91. February was, is that right? No, that's December. Sorry. January was 229.78. So we're not quite there yet. But, oh no, we've been up to 230.87. So we've definitely tested those 2010 highs. Yeah, and I don't like the look of that candle. So this is telling me that that we're going to get a little bit of a correction. Yeah, you're right. It does actually. Not far off the New Zealand dollar chart. So, well, actually, I think cable's due a small correction against the dollar anyway, so that ties in. Okay, yeah, small correction, nothing too serious. Let's unwind those overbought stochastics and look for some support. I've just thrown some fibs on without going too mental looking at it. You just do some quick analysis on it. Let's have a look. Okay, so just with some fibs and some trend lines, we can see we've got some support down at 2.255. Okay, that looks like that might even just hold it. Down here's a nice one. We've got 222.18, 221.90. That looks like a decent support level. Obviously, by the time we get there, this trend line might well be intersecting with this sort of fib support area. So I would say it's going to take us into July, isn't it? We've got at least another week. We've got another week to go until we hit July. So we could drift lower to this point by the end of June, beginning of July, and that would be a lovely little buying opportunity because you certainly don't want to get bet against the bulls at the moment. And in the long term, the 23.6% fibs at 222.33. So that really ties in beautifully, actually. That 222.30 to 222.00 area looks like a really tasty support level if we were to drift lower over the next week or so. That's my quick analysis of that market. But yeah, we certainly wouldn't be surprised to see a pullback at this moment. Okay, that's all I think I need to say about that, unless anyone needs me to talk more. Obviously, if we do push above, let me see now. We've got a November 2009 high at 232.97. So a push through 233.00 before the end of June would be positive, and I wouldn't be trying to bet against the bulls. I mean, I wouldn't be betting too much against the bulls now. I suppose you could try a little short with a stop above yesterday's high if you thought that this was a negative enough candle and you think that the 2010 highs could trigger a correction. It's again relatively low risk trade because if you're short, you might even see it down to this level here, 225.50. Right, better crack on. We're looking at next GBP Aussie Dollar. GBP Aussie Dollar. Does QE in Greece? Yeah, well, the Greece news wasn't too bad and sent the stock markets significantly higher this week, and the euro didn't really do anything and then came off. I'm not trying to make sense of the QE and the Greece thing. I don't try and second guess politicians. God knows what they get up to. They'll keep us guessing, and I wouldn't even dream about gambling on that outcome. So my job is technical analysis. I like to think I'm not too bad at it, and that's my edge. So I leave that to the economists and the politicians, really, and I trade something else until we know what's going to go on with that. Gambling isn't my thing, and that really is just a gamble, isn't it? If you're going to gamble on what politicians come out with, then all fair enough. But I'm not smart enough to do that. Okay. GBP Aussie Dollar. Let's have a look at it. Okay, this is interesting on the monthly chart. We've taken a bit of a tumble from 2001 again, so similar to that New Zealand Aussie QE chart, and again bottomed out in 2013. We've also seen a decent recovery over the last 2.5 years, so similar pattern, but this time we're hitting more important fib resistance at 204.16. That's held. I don't like the look of these candles on the daily chart. Okay, we've got this pretty negative one. We've got another fairly negative one here, and we've got these little 3 spikes higher. So it's sort of telling me that it's time to take some profits on this pair, and we are well overbought. We do need a bit of a short-term correction. And the longer-term trend is bearish. So really, you know what? You can't even rule out that this is the peak. Really, I'm trying to look for some trend lines on the monthly chart, but I can't see them. I think the fact that we've hit 38.2% fib on the monthly chart is significant enough. And I really don't think it's a great idea to be long this right now. So I'm just going to flick onto the weekly chart. think you need to see the weekly chart. Sorry, I didn't show you the monthly chart, but otherwise I'll be just flicking through charts all the time. Okay, so this shows you the whole rally, the whole recovery. And don't forget, this looks like a really nice bull trend, and it is, but you've got to check the monthly chart to see what the long-term trend is, and that is most definitely negative. Not seeing anything negative on the weekly chart particularly, but this could be a little double top on the weekly chart for sure. So we'll just watch that. Fibs make it nice and easy. Look, this the 23.6% fib ties in with a high for February of this year, so that would be an obvious first downside target. We've got 2.0015. That looks like an obvious first target for any correction. You can put these fibs on your own chart. But yeah, I wouldn't want to be long this right now. It's been a good run, but you definitely want to be taking a profit. Now, if we can get a weekly close above last week's high, that would be good. But right now we're trading below that 38.2% fib at 20.0416. So we have rejected it. A weekly close below there, as it looks like, is looking more likely right now as we pull back this week, would signal failure. We haven't managed to close above there yet, have we? No, we did close above that fib last week, but we're pulling straight back. So yeah, okay. I would definitely be taking chips off the table on this one and looking for a pullback. And you certainly can't rule out. I would like to see more of an. I wouldn't just say we're going to stop dead and then turn around. So I'd like to see a bit of a negative pattern here before I start saying that's the rally over. But there is a very strong chance that recovery is actually over. We could be right now staring at the peak for this market, and we could start heading lower into the summer. Certainly. It's pretty simple though. We get a weekly or at least or even a monthly close. We're not far off the end of the month above 20.0416. Well, preferably above what have we got to 20.0534. Yeah, I'd like to see a close above there just to make sure we have properly cleared it, or at least up towards the upper end of this week's range. If we could close the week about up towards the upper end of this week's range and then break higher in July, that would be positive. But otherwise, don't look too good to me. Okay, I think I'm probably waffling on that one. Let's crack on. I've got one more pair to do, have I? I do believe. Let me see. Euro GBP. Yeah, that's nice and easy. Everyone's happy if they're going to Europe this year for their summer holidays. Let's do the monthly first. Fib-wise, not saying an awful lot. Trendline-wise, there's nothing to do there. Moving averages, looks like we're getting a potential bullish crossover here, doesn't it? Look, but that's on the monthly charts. It's going to take 2 or 3 more months before we see that crossover. In fact, still worth paying attention to though, because once we've got this negative crossover here, well, that's actually not quite so negative because the 100-month moving averages are still going up, so that's not quite as negative as it looks. But the moving averages certainly did their job as a resistance and support, didn't they? Okay, so looks all right actually. Looks okay from the monthly chart. Looks quite positive. Wow. That's got really volatile lately, isn't it? I've been looking at this myself. That's got pretty choppy. But still looks okay. Still looks quite positive. Daily chart, let's try and get some sense out of this. Well, the trend lines speak for themselves. It still looks pretty good. We are in just about an upward sloping channel here, as you can see from these 2 little trend lines. They're only a month and a half old. We're holding above the 55-day moving average. That's worked really nicely as support over the last couple of days with this little pullback. Moving averages are still pointing higher, 55 days above the 100, prices above both of them. Yeah, I think it looks all right. Nice big blue candle yesterday. Obviously taking a bit of a pause today. We were a little bit overbought, but I wouldn't worry too much about that. Just flicking through some short-term charts just to see if there's anything that I need to know. Not really. I think this looks all right. I think you can afford to stay long this pair. An obvious target, well, 140.49 we're above there, so the obvious target is now the May high up at 141.72. We're not too far off there, less than 100 pips, and then we've got this trend line up here at around the 142.80-ish area. That's probably going to coincide roughly with the March high, 142.55. Okay, so these are the two targets. 141.70 area, 141.60-70 is the first target, and then if we can get through there, retest of March highs at 140, what did I say, 142.55, 142.80 on the trend line, 80.90 by the time we get there. But yeah, it looks all right to me. I wouldn't necessarily be getting out if you're long. Looks okay. A bit late to be buying into this, of course, but it does look quite positive. Okay, I better pick this up. Gold. Gold is already, I don't need to look at it. I do it every day and it's dead boring. Sorry to say, there's absolutely no clue to direction whatsoever. I've tried throwing all sorts of trend lines on here and, you know, I've looked over all sorts of time periods. I mean, this is just impossible to guess, and it's just very erratic. Very erratic indeed. Look, the only thing that matters on this gold chart, as far as I'm concerned, is what's happened over the last 3 months, and sadly, that's basically nothing. You know, we've just gone sideways. I've put trend lines all over the place. The moving averages are telling us nothing. There's just no trend. We're just going nowhere, and I struggle, to be fair, to write a report on this every day. And if you're trading gold, I do feel sorry for you because there's just not enough opportunities. Look at this: 1, 2, 3, 4, 5, 6 days in a row where we just went nowhere. The levels are actually working quite well, to be fair. There is some money to take out of it, but have to be brave to trade the top of the range. You are right, but that was not. I wouldn't say it's a no-brainer, but you know, we pushed above this little trend line here, but the 200-day moving average did its job. Anyway, you know, there's no point in me talking about it. We're just not going anywhere. We haven't gone anywhere for quite a while. Even if you look at the monthly chart, look. You know, even the monthly chart, it's just not doing anything. So, you know, the candles aren't telling me anything. We're holding below the 100-month moving average. I guess that's quite negative. I've been quite negative on gold for a long time, and I'm still quite negative on gold. Let's just see the weekly chart. But the fact is, we're not going anywhere, so you can't make something out of nothing, and this really is nothing at the moment. Sooner or later we'll break, I'm sure, and really the right thing to do is wait for the breakout, trade the ranges, get in and out, see if you can nick some money, and then wait for some sort of breakout direction. Wait for the market to tell you where it's going. Don't try and guess. I certainly couldn't guess. I haven't got the faintest idea where this is going. I'm certainly more negative than positive, but anyway, I think you get the picture. Oil's a bit more interesting. This is ready for a breakout. At last. Again, this has been going sideways for such a long time, and this is another market I report on every day. So trying to find something to write to the banks and my subscribers has not been easy. The levels haven't worked too badly. If you follow me on Twitter, then you'll know that some of the levels have been okay and there has been some money. Right, here we go. At last, looks like we're getting about to get some movement in oil. I'm still not going to guess which way we're going to go, but oops. There we go. Blow it up. You can see what's important here. Sorry, just a quick question. Get them holiday brochures out. Yeah, you're right. Off you go. Gold, isn't June generally low according to seasonality study? Probably. Yeah, I know these seasonality studies, and then they pick up again late summer when there's Asian buying, India, and all that kind of thing. So yeah, you're probably right. Maybe that is just a normal pattern. Good point. Right, oil. Boring. Boring for the last month and a half. Well, the last 2 months, really. Look, you go back to the middle of April, we've hardly done anything. No direction whatsoever. No great volatility. But finally, we must surely be ready for a breakout. That's what I wrote in my report this morning. Get ready for the breakout. We're starting to test both ends of this little triangle pattern here, and sooner or later we're going to break one of them. I don't know which one that will be. I could guess. It's a 50-50 guess, isn't it? But that's not what we're in the market for. We're looking for an edge. So really, you're looking for a break above, but not a false break like we've seen today. I've been warning about a false break. So I'm looking for a move above 61.80. I'm looking for a move above this spike higher, really, for proper confirmation. Otherwise, you could get sucked into a long at the wrong time. And you could have possibly done that today as we've got 61.57. So the trend line's around 61.40. Just be careful. Don't be too hasty. I do think we will get a breakout, but probably the first break will be a false break. You often see that, just to suck everyone in at the wrong price, and then bang, goes the other level, breaks down, and all those poor suckers lose money. So just be careful of that. We've had a small false break above that trend line this morning, by the looks of it, and pulled straight back down again. So as I say, I wouldn't really be particularly bullish until we get through 61.80 at least, or maybe have 2 days of closes above this trend line around the 61.40 area. Can't really say much more than that. It is a case of waiting for the breakout. 55-day moving average down here around the 59.80 level ties in quite closely to the lower trend line, which at the moment is 59, sort of 55, 59.50. So these are really the only levels that matter in oil. Anywhere in between here is just no man's land. Not really anything going on. I guess this fib at 60.50 is some sort of factor. You could almost use that as a pivot because it's almost right in the middle of this triangle pattern anyways. So yeah, I think that's it. Wait for the breakout. Don't be too hasty. You know, you need some sort of confirmation. Again, on the downside, wouldn't really be getting too short until we break 59.20. So just watch for the break of 59.50 and maybe sell small, but save some bullets for a break below 59.20, because I think below there, that's when the stop losses should really get hit and the downside could accelerate. Dollar CAD. That's not a problem. Okay. Jason, how long do I spend on the charts each day? Okay, yeah. Well, right now, when these markets are going sideways, I can do a report in as little as 10, 15 minutes, because a lot of it's just repeating what I've written the day before. Blimey, this looks like a right old mess, doesn't it? This Canadian chart looks like I need to take off some. I've not looked at this since the last FX Street webinar by the looks of it. Let's take off. This is very confusing indeed. Yeah, I can spend as little as 10 or 15 minutes, unfortunately, at the moment, because it is so dull. But yes, other days more. Trying to, a jungle. It's a jungle out there. Other days, yeah, more time. I do look at many different time frames. That's what takes up all the time. I've got 3 screens. I could really do with 4, and you have to do that. You can see just by what I'm doing today, looking at the weekly, the monthly. You've got to study them all, and I'm doing it quite quickly today, obviously, because I'm not actually writing your report. Just giving you a rough overview of my thoughts and my views. But if I'm writing a report for my subscribers, then obviously got to be a little bit more accurate than that. Otherwise, they won't make money and they won't like me very much. Okay, right. I've got to try and make some sense of this. Oh, hang on. It's reloading. Sorry, I don't know why it's doing that. Right. The monthly chart is just a mess, really. Just let me have a quick look. I'm going to be silent for a minute. Okay, really can't make much out of the monthly chart on this one. Weekly chart. No, just been dancing around all this year, haven't we, really? Okay. I'm going to struggle with this one, I think. That's no help at all. Okay, well, yeah, I'm just looking at the monthly chart rather than flicking backwards and forwards, but there's nothing really to see on this one. Oh, hang on. Am I missing some data? Sorry, there we go. Right, what can I tell you? This looks like it's, well, the trend lines obviously show that this is the ranges over the weeks are narrowing. So I guess that makes sense. The moving averages are kind of doing their job as support and resistance. And so are the fibs, which are sort of tying in with the moving averages. So we've got sort of 123.75 to 123.90 on the upside, 122.66 down to 122.57 on the downside. Those are your first support and resistances, really, on the daily chart. Break below. We got, look at these. We've got 3-4 day lows down here at 122.15, 122.10, 122.17, 122.00. So that's obviously the next kind of level you want to be looking at, and then you're looking at the trend line down here. Again, this is kind of a no direction type scenario, really, isn't it? I suppose overall we're in a negative, short-term negative trend. We haven't really trended anywhere since the beginning of the year. In fact, we're trading where we were in the third week of January right now. We're trading just below February lows, about 50 pips below February lows, February and March lows. I can't make much of this. I can't really give you any clear indication of where this market's going to go. To me, it looks like it's just going to drift sideways. So to say, watch the resistance, watch the support. Then we've got the trend lines on either side, and you're going to have to see a breakout of the trend lines to get some direction. But I think it's going to be quite a while. We're going to just be trading sideways. So I think you just want to look for those big levels, get in, get out, and don't look for too much direction right now. Moving averages are going sideways, and that crossover doesn't mean anything at all. The fib levels are working. Well, the 61.8 isn't, but the trend line should start to work now. Yeah, afraid that's it. I can't really say much more on that, unfortunately. Shame. Dollar CAD is usually quite a good market, but let me just tighten up, see if I'm missing anything on the rest of the daily chart. Not really. Am I? Nah. I'm trying to make something out of nothing there, I'm afraid. Sorry about that. Right, have we done the euro yen? Oh, sorry, no, we haven't done the euro yen, have we? Okay, euro yen. EURJBP. JBPY, rather. Okay. Best moving averages for 1 hour time frame. I've just been asked. I use the 55, the 100, and the 200 period. I don't use any shorter term than that, but I do use them on all periods. So that's all I can advise to you. Yeah, they seem to work okay. If you wanted to try something shorter term, you'd have to have a little experiment. Okay, what are we looking at? Euro yen, euro yen. Do I aim for 1-to-1 risk-reward ratio? Oh, stop loss. Well, if you read my reports, you naughty boy, you obviously don't. What I do is, on my reports, I I actually do specific trade signals now. I used to just give support and resistance levels and my idea of direction, but I actually now give very specific buy here, stop here, target 1, target 2. So my target 1 is a place where you can, when I trade myself, I get out of half the position at target 1, move the stop up to the entry point, and then I look for target 2. So the second half of the trade is basically a free run at it. That's what I do. But that's all based on chart levels. It's not based on simple, it's not based on a monetary loss or whatever. No chart. No, you're right. What's going on? Why is this not coming up? I'm sorry about that. There ain't a lot I can do if I don't get a chart up. I don't understand what's going on here. Oh, hang on. Sorry, I put in the wrong code. Do beg your pardon. Right. Oh, no. That's weird. URJPY. Ah, there you go. My mistake. Sorry about that. We're running out of time. Let me try and quickly get this chart up. Someone's asked me for the euro US dollar, but I don't think I'm going to have time for that. But the levels are working beautifully today, I've got to say. 112.35.40 we had as our sell level. I'm pleased to see that it topped out exactly there. And we're heading lower, hitting target already. What did I have as target 1? Let me just get my euro US dollar report up. Right. Euro yen. Fibs are working nicely, aren't they? Right, I'll be quick on this one. We've had a good run. That's all I'm going to look at now. This the year chart. Well, it's all pretty much done for me from the last time I looked at this one. It's fairly obvious that the 50%, 61% fib are just working perfectly here. That's all we've done. Danced around in between the two of those all month. So if you were trading the 50% support at 137.90 and selling the 61.8% resistance at 140.60, 70 area, you've been doing all right for the last 3 or 4 weeks. Which way are we going to go? Which way are we going to break? I haven't a clue, but I think we're going to go higher. The stochastic got very overbought. We're unwinding that now. The sideways pattern tells me that this is a continuation. We've held above some important weekly moving averages and fib supports. We're holding above some good monthly moving averages as well. So, yeah, I like the look of this. I would, if I had to gamble, I would say we are eventually going to break above 140.60, 140.70. What's this high up here? 141.00. Okay, so push through 141.00 would confirm a move up. That's what I think will happen. So if I had to bet on this pair, I would be certainly buying it down at around the 137.90 area and then making profit up here. But eventually a break higher looks likely. I think this is not a topping pattern. I don't think that's any sort of double top or anything. Despite the fact that 61.8 is an important resistance level. So we are looking eventually for a break higher. I think that's the best chance. This thing. Moving average crossover looks quite good. We're unwinding the overbought situation by going sideways. I like it. I think it looks good. I'd better crack on with another one before I get told that it's the end. Going to do a free 2 week. No, I'm not doing any free. We did do a free week. Oh, yeah, that's you're obviously an ex-subscriber, so you're a good boy if you're an ex-subscriber. We did do a free week. A free 2 weeker for ex-subscribers to try and lure you back in and show you the new style of reports with the pure trade signals and everything else. So I hope you enjoyed that. And but yeah, hopefully you've already seen the trade signals. And I'm improving the trade signals every week, really. And actually, we did a survey amongst our subscribers, and they told us that we've got a 75 to 80% accuracy rate. So I'm really happy with that. Really happy with that. Yeah, sure. Okay, I've got time for another pair. Wish it was cheaper. Yeah, well, listen, 50 quid a month. It's less than £2.50 a day. So if you cannot make more than £2.50 a day out of my advice, fair enough. You should not be paying me. But I can pretty much guarantee you will. Even if you trade micro lots, you will make. I mean, most of my trades offer a 30 to 60 pip profit. So, even if you're betting 10p a lot or something, you should make more than you should make more than I charge. And if you don't, I give you your money back. So you've got nothing to lose, have you? I give you your money back within 2 weeks. No, but seriously, the reports have our subscribers have told us that we are 75 to 80% accurate, and we do give very specific trade signals. Now, it's not support and resistance levels. My retail subscribers said that they basically can't be bothered to read it and decipher it. They just want to go bang, 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 put the trades in. So a lot of our subscribers now, they don't even trade it. They put the orders in that I suggest. They walk away and they just wait and see at the end of the day what's happened. And I must say the response has been really good. So I'm happy. Have a look. The other thing I'm going to say before I leave is I did a 2-day course over the weekend. You probably know that if you follow me on Twitter. And it was really successful, I'm happy to say. Got some good reviews. Here's the first review, actually. We had 10 people join us. We're going to make the video available. I'm going to give you a quick sales pitch here, but I get emails all the time from people who have spent frightening amounts of money, really awful, and it makes me sick to know that there are people out there charging stupid sums of money, and these guys have barely even traded. Makes me angry. I'm not going to go on about that. But I get this all the time. So I thought, right, I'm going to actually sit down, write a course. I spent 3 months writing a course, 100-page course, and it's not only all the theory that I use, much of which you see, but there's an awful lot more to what I do. Obviously, these FX Street sessions are very brief. Obviously, you know I analyse up to 25 markets every single day. I've been doing that for a long, long time, trading since 1987, in fact. I'm a very old man. So I've now written this course. It's 100 pages. I've got 8 hours of recorded video from the course over the weekend. Follow me on Twitter, which is at DayTradeSignals, and you'll see me posting more reviews as and when they come. They're all independent reviews on SiteJava. I can't make them up. It's purely what people want to write. And I have got a couple of negative ones on there as well, so it just goes to show you can't please all of the people all of the time, but I think I do please 97% of the people most of the time. I'm going to make these the videos, the 8 hours of video, training videos, and the 100 pages of notes available to anyone, not just our subscribers. So if you're interested, follow me on Twitter, and you'll see when you can get hold of that stuff. Basically, what I promised is I will make you a successful trader, because even if you don't do it after the videos and the notes, I will stick with you. You know, I don't abandon you after the course. You can ask me questions forever, and I will keep on working with you. And I have turned quite a few people into successful professional traders, which you probably already know if you follow me on Twitter. Anyway, that's enough of the sales pitch. I haven't been told to shut up yet, so I actually could keep cracking on. Which market have I not looked at? Anyone want to shout one out? You ask questions even though you don't subscribe. Okay, well, you ask me on Twitter, do you? And hopefully I answer you. You're always on here, though, Naz, aren't you? We always have a good old chat on the old FX Street. Thank you. Appreciate that. I do like to help everyone. You know, I'm not just after your money. Yeah. Right. Did we want to look at one more? What have I? Oh, Euro US dollar. No, we've done Euro US dollar, so there's no point going over that one. Let me just see. Silver, wasn't it? Silver. Let me see if I can find silver. I'm going to get cut off any minute, so I better try and make this quick. XAG. Here we go. I'll show you my Euro report for the day, actually, seeing as you probably haven't seen it. Someone asked me about silver. Oh, blimey. I'm not even going to bother with silver. Look at that. I don't need to tell you that this chart is telling me that silver's going nowhere right now, do I? That's 6 months of nothingness. So I don't think I need to tell you that, do I? I'm afraid, unfortunately, you can't make something out of nothing, and that is really a nice sideways trend. I mean, I'm glad I'm not writing reports on that anymore. Okay, here's my Euro report. Someone wanted to see it. Let's have a look. That's my home. That's my home page. And euro, euro, euro. Right. Euro is 50% support at 111.30.25, which held downside yesterday. First resistance on the bounce. Blah blah blah. I said on a break higher, look for a selling opportunity at. This is the kind of thing I write. Here you go. Oh, sounds like it's over. Well, anyway, look for a selling opportunity at 112.38.42. Oh, to be fair, I missed that by 3 pips. So we didn't actually hit that perfectly. But if you did sell that, you would have been all right. Okay, we're done. Thanks, guys. Until next time.